Hey, it's Michael Saul with the Stock Market Trading Watch List for Thursday, November 17th, 2011. Let's take a look, if I could fix my fib grid, let's take a look at some indexes, some sectors, and some stocks. We are still in this triangle with the S&P, and after Tuesday's action, which it wasn't that great because we did reject the higher prices, but I like the way we bought up the lower prices. I was looking for Wednesday to be a potential break day. It didn't happen. Gap down, we filled the gap, we went higher after lunch, and then we just rolled over. We did not trade above Tuesday's highs. So then we wound up selling off rapid and just really ugly into the close. We did hold this trend line here. So if we get a break here, if we can break down from here, I'm looking for us to test this 50-day moving average here and this to form, to finish up a complex correction, A, B, and then boom, boom, C. Okay? That's what I'm looking at. I'm staying bullish here because the follow-through day is still intact, even though this is a distribution day. We had a distribution day here too. Still not enough, in my opinion, to break the uptrend, but we're definitely under pressure here. So if we are going to break from here, I want to see us hit support and then turn up, get a nice high volume reversal like candle, like this, okay? Something like that. All right, so that's what I'm looking at on the short term. Could we just zip up from here? Yes. I mean, the news was that Fitch Ratings said that U.S. banks have exposure, and if Europe gets worse, they're going to be, in trouble. Their creditworthiness is going to be in trouble. I mean, duh, of course. If anybody didn't know this, I mean, I'm the I am the worst with the fundamental stuff and the geopolitical stuff. I could care less. I'd rather look at the chart, but I obviously am not going to just put blinders on. I want to see what's going on. But I don't read the news nearly as much as some other people. But even I knew that, yeah, if Europe keeps getting worse, it's going to come here. I mean, it just makes the most sense. There's obvious, I mean, it's not just MF Global that had exposure over there. I mean, sure. It was, at one time, it was considered safe, and up to a few months ago, a lot of people still held that belief. Whatever. Look, I don't want to get into this argument here about it. I just want to look at some charts. But, I mean, I think that it was a pretty big overreaction to that news. So I would not be surprised if we rebounded right from this. But obviously, I'm not going to sit here and predict that that's what's going to happen. All right, but I'm staying bullish for the time being. But I'm waiting for confirmation. That's what I wrote in my email. And you can get on my email list by going here and signing up. I'm bullish, and I've been bullish. I've been leaning bullish, but I'm also waiting for confirmation. I'm not going to sit here and just say, okay, I'm bullish, so buy in here or buy that. It doesn't make any sense, So I'm still waiting to see if we can break out of this this pattern here. All right, so that's the S&P. Russell also in a triangle. Didn't quite test the bottom of it, but I mean, I could also be off on my line. It does look like it tested it anyway, but if I adjust my line a little bit, do a little bit more to go. That breaks. You got the 50-day there as well. NASDAQ 100 is in a diamond pattern, I think. I'm not really good at drawing these. I'm sorry to laugh. I noticed as soon as I pulled it up that this line may be a little off. And so I'm not really great at drawing these here, but yeah, this is in a diamond pattern here, and we just want to wait to get a break out of it one way or the other. All right, also have the moving averages here. It is above the 200-day, but it's really playing rotation around this 78.6% retracement. All right, semiconductors. Yeah, I mean, the song remains the same here. You know, going to go to the 200-day. The banks, watch this 50-day. Yeah, I've been talking about the weakness we've been seeing in some of the financials, but that didn't keep me off from being bullish. So I'm not saying, see, I told you. No, I was still looking for us to break. I was looking for the financials to turn, and especially the banks here, to try to break out of this triangle. But this is not good, okay? A lot of these stocks, this is not good. Here's Bank of America, continuing to slither down. Here's JP Morgan, Citigroup. Yeah, not good. Citigroup lost to 50 again. His Bank of New York lost to 50. His Northern Trust. Okay. About to test the 50. His Zion. Yeah, you gotta watch this. He's sitting here on the 50. All right. Okay. Broker dealer XBD. Yeah, not good. Goldman. Yeah. Not good. Back into the 90s here, and if this support doesn't hold here, 94.52 could get a retest down. MS through the 50-day. I mean, held, and then nope. Jeffries, just ugly. Looks like it wants to test this low down here, 979. Lake Mason, I always like to look at Lake Mason when I'm looking at the brokers. Yeah, it's not nice. It's just pretty ugly. And they still carry weight, the brokers and the banks. Here's the cyclicals. Still in a nice consolidation here, but looks like it wants to drip down. XLB. Yeah, not looking so sharp. Here's the healthcare index. Ugly day, down 3.4%. Watch these moving averages to see if they'll come in and hold. Biotechs. Yeah, they have not been looking so sharp here, this index. So this looks like it wants to retest the lows. Gold. Well, it doesn't look that bad. Royal Gold. Is it a coil? So if this could pop out, watch for a retest of these highs up here in 83.87. So we'll have to get around, through this high, through the 81.24 high. Silver or SLV, still in this consolidation pattern here, not in a rush to go for. Okay, oil, just popping. This was a beautiful continuation pattern after the breakout of the base. All right, broke out, then pulled in. It's been working nice. OIH tried to break today, but got rejected. Some of the big Earls. Here's Exxon. Not nice. It's Conoco. Not nice. Alright, let's look at some of the glamour names. Let's start with Apple. I always start with Apple, probably because it has two A's in it. Alright, so not looking so nice here. Still thinking 369.75 might get tested. If we see residual weakness, if we don't just snap it back, and we see residual weakness, watch this one here. Okay, Amazon. They're not looking too sharp either here. It's not looking too sharp here. Okay. Google. Keeps trying to get to those highs, but keeps falling a little short. Baidu, no. Not looking so great. Broke out of that little pattern, but already starting to fail. Cena not looking so sharp either. How about Ren? In the fours. Ugh. Where is the super guru that was screaming the buy up here? Wow. No shame, boy. No shame, these people. Here's LinkedIn again, testing the 78.6% retracement. 1Z, 2Z, 3Z. So if it finally breaks, look for a retest of the lows down there. That's it. Short term. Let's see what we're going to do here. if we're going to get a bounce or continue to go down, test the 50-day / the ABC measured move. All right, have a great trading day on Thursday. Talk to everybody again on Friday. Questions, you can find my contact info on either of these two sites or at the beginning of the video. Take care.